Great. So we have started, I believe. Welcome, everybody. So I'm just looking at who is here already. Hello, Marcus, there's Sharon, Onazaya, Sasha, Luke, one, and then, of course, the fabulous Courtney. Hello, Emma McGregor. Oh, there's a few familiar names, or a couple of familiar names. Now, oh, great. I see a few people. So you've got your chat boxes going already. Fantastic. I was just going to ask if that's all available to you. And I was just saying to Ella and Courtney that during this session, because we've got a relatively, small group, feel free to ask questions as we go in the chat box. If I don't see them, Ella or Courtney will let me know. But I thought we might just get straight into this because we've got an hour, and if everybody else out there who's listening to this recording doesn't know, we have a cyclone outside as well. So good timing to squeeze this in just before. And one of the sessions that we will get to over time, of course, will be around insurance, but we're not covering that today. So to begin, I'd like to introduce myself. I'm Dr. Di Johnson. So I am a senior lecturer in the Griffith Business School in accounting, finance and economics, and I teach in financial planning. Okay, so to begin, I'd like to acknowledge country. So I am here in Meanjin, also called Brisbane, on the lands of the Turrbal and Yagara peoples. And I'd just like to acknowledge and pay my respects to all First Nations people, but also to just give us a chance to reflect on wherever we are on those unceded lands. Okay, so to begin, in an ideal world, and we will get to know each other a little bit. I've got a second screen here with the chat boxes, so I'll try and keep an eye on a few things and see if anybody's got some particular interest areas. But in an ideal world where we're looking at financial capability and trying to understand the financial system in Australia, which, let's face it, at times seems like it's been designed to be overly complex. So there's some work to be done from the other side of finance there. But we would probably start at really looking at the goal setting and management of goals, how to write a really smart goal and how to review that. Then we'd sort of do some reflection on money tendencies, our money background. There's some work that people can do on money personalities and preferences, but certainly some of the thinking and decision-making biases. So we have whole courses on that. And behavioural finance is, an increasingly interesting area, I personally think, because sometimes you can know lots of things around money, but if you are particularly impulsive, for example, then that can sometimes throw goals off course. So really understanding yourself and your preferences and how you make decisions and what some of your thinking biases are is also really important. Then we might look at timeframes and talk about risk management and risk profiles, what your risk-bearing tolerance is compared to your risk-bearing capacity. So, for example, some people might like to do really risky things with money, but actually they might only have a very small emergency fund and it might not go so well for them. And then we would, start to put that plan in place towards some goals, and we'd prioritise those goals, a bit of a savings plan. We'd then look at budgeting styles and debt management and some, information on investing. Certainly we'd have a look at tax time and then risk management. So not just in terms of insurances, but other approaches to managing risk. And then we might look at superannuation and some of these big picture financial systems and products that we have in Australia that can work really well, especially with a little bit of information and time on your side. And then we might look at some estate planning. So whether you've got a will in place, financial agreements. So for example, if you're about to go into a relationship and you have different amounts of assets. So this is something that is increasingly being looked at. And then we would also look at some of the pitfalls in terms of financial abuse, gambling, how you can check your credit score, particularly given the leaking of identification information that's been happening and the prevalence of scams. And so to see what some of the, some of the safeguards that you can put in place, but also action that you can take afterwards. And then how to recover from setbacks. And then we might look at HECS and help debts, bank accounts, private health insurance, and financial aid, and a whole lot more. So if there is an appetite after this session, and depending on what people would prefer, we can potentially have a look at some of these other topics over time. But the information that I got back from the Instagram poll, which was excellent, thank you to everybody who responded, showed that this was the topics that you wanted covered in priority order. So the first one really is about where to get financial aid or help. And I'm going to spend a bit of time on that now, because clearly there's some people who are really looking at some of their immediate, more urgent goals and priorities. And so I want to validate that and give it some credence and do it justice today. If you're somebody who's approaching this and you're ready to talk about investing and that sort of thing, well, some of those topics can happen over time. But then also to look at HECS and help debt, because there were some questions that came through, and thank you to everyone who responded to that poll. There were some questions that came through about, basically, should I worry about my HECS debt? When should I start paying it off? What if I want to make some installments? And so I thought we'll go through that so that you can perhaps have a think about some decisions there, and just have a bit more information to make your own decisions there. And then bank accounts, some saving, some common money pitfalls. We won't have too long to spend on that, but I'll at least go through what some of them are, and start to normalize that people make mistakes. There is no such thing as a perfect financial life, and it's just about how we recover from those. And so everything doesn't always go to plan, and then it's also about asking for help. So that's also really important. And then with budgeting, I've got a couple of examples of how to get started, what some of the some of the main steps are, but then also some different styles, because people have different approaches to budgeting. Now, in terms of some of those other topics, I would have loved to have gotten to them today, but we've got 1 hour, and I want to leave time for some questions as well. So let's see what we get to. But if you have a particularly burning question and we're not getting to it towards the end, please let me know. And also, if you put your hand up or indicate in the chat box, I'll answer them as we go. Now, as a disclaimer, I always have to sort of say this, particularly when it's related to finance, that this is general information only. And so these are about topics that you've requested. There's no personal advice that can be provided. So any of the information I have is purely factual. It doesn't take into account your personal objectives, situations, circumstances, or needs, and it is objectively ascertainable to anybody. So there's no financial product advice or anything. So I just have to give that disclaimer, and you will see if anybody asks any questions around particular things. So there'll be a limit where I can just refer you on to other information or for your own advice for now. And to begin, there are a lot of topics to cover, but given that the biggest priority that came through on the survey from students was about, really quite more pressing, immediate financial needs, I thought we'd start by really taking a step back and looking at the big picture in terms of why this session, and then also why higher education. And at Griffith, one of the reasons I absolutely love working at Griffith is we have very strong values regarding diversity and about having brighter futures for more people. And so from a broad perspective, historically, higher education, well, certainly in the last couple of 100 years, has been fairly limited to a particular type of demographic that has had a chance to have input and to flourish in this, and even to have access to higher education. And from a broader perspective, internationally, nationally, and certainly at a local and community level, for communities, industry, and indeed the environment to flourish, we need far more diversity in thinking. We need more people having access and being able to participate in and successfully complete higher education, and then apply their skills in community and industry in their lives. And so that is a very, very strong priority for us. And I also wanted to put completing a degree in context, because I think sometimes students forget what they're doing. Like, this is a significant goal that you're undertaking. So, sorry, I've just got some beeping happening in the background, but it's stopped now. And So I had a look at the latest data. So this is from the Education Work 2024 tables from the Australian Bureau of Statistics. And out of the whole working workforce, so from 15 to 74-year-olds in Australia, about 1 in 3 have got an undergraduate degree or higher. And so that's up 10% from 2010, and it's up about 20% from when I first got my undergrad, because I'm significantly older, let's put it that way. And the Universities Accord and some of the strategic documents that universities have got are really aiming for about half of Australians to have an undergraduate degree by 2050. And you can sort of see, I'm not sure if you can see my highlighter here, but out of the 25 to 34-year-olds, there's around about half that are getting there. And so I guess part of the why, and for you to see going through this degree, going through this study in context, is that over time, we're going to need more than 1 in 3 people with an undergraduate degree. It will start to become expected, and getting to that 2050, we can't just have a very narrow group of people going through. We have to increase the people that we have coming through, and the more diversity and background is really important. And financial constraints are absolutely noted as that main reason for not completing study or deferring study. Sorry, a bit of a typo there. Anyway, and so, and what I found interesting around, and this is from the Universities Accord, is that even high socioeconomic groups or students from high income backgrounds, almost 1 in 5 said that financial constraints were the reason why they weren't going to do higher education, let alone people on lower incomes and medium income. So it is by far one of the biggest constraints. And so with the session and a lot of the other information that we'll go through is about providing as much support as possible in that context. And just to help you feel like, you're not alone, this is very pressing. Now, I've never really used this in general conversation, but COSI-LIVS was the Macquarie Dictionary Word of the Year in 2023, apparently. And to me, that sort of just underscores that there is absolutely this growing sense that modern life seems to be getting tougher. Some would say going downhill, as they've sort of said there, and that this rising cost of living, as COSI-LIVS is slang for, was something that just became part of our everyday sort of language. We hear about it every day on the news. And, every time you're at the petrol station or grocery store, you might be thinking, why COSI-LIVS? Why? And I like that people are trying to find humor in it for the coping strategy. But I also think it's so important to take this really seriously, particularly for young people. And I realize we may have people from a range of ages who are here. And some of this information is sort of targeted for younger students at university. So bear with me if you're not in that group. But young people, the 18 to 34-year-olds in particular, are really bearing the brunt of some of the cost of living, impacts. And, when I look at financial literacy and context, so I'll be giving a lot of information, and we'll be talking about how you can manage some of these systems and also your own personal decision-making better. But I don't want to do that in a way that would in any way suggest that if you're struggling financially, that it's somehow your fault or a deficit on your behalf, or as if there's not this broader context. So as we saw in the previous slide, 90% of Australians rate cost of living as their number one concern. And the world of finance and indeed education, higher education, has been shown to have some biases, where some groups will have disadvantage entrenched. And so, and that is something that is a constant challenge, and something that we will, well, for people who work on inequality and bias, something that we'll never give up on trying to reform. And so this session is really about giving information to try and help navigate a complex financial system. But I just did want to acknowledge that there are cracks in the system, and that still needs systemic reform. And I want you to keep that context in mind, because sometimes it might feel like, oh, nobody's, taking any notice of all this. It's like, well, absolutely. And that intergenerational difference is also something that's got a lot of policy and research attention at the moment and will continue to have. But so there are potentially limits to financial literacy as such. And, help and reform is also important. So this is only part of the story. And, even some research that I did with some colleagues myself, but other articles and other research projects are showing that financial literacy is great, and certainly capability, support, advocacy absolutely helps. But that income is still more important in terms of financial well-being, and is even a precursor to having improved financial capability at some time. So, and young people already know that, because as we saw a couple of slides ago, for 18 to 34-year-olds, they're making large scale changes, with 61% undertaking additional work hours to make ends meet. So, and so in that context, you might think, well, why do this? And it can be really hard. And can I just ask a quick question for the people who are here in the chat box? Can you nominate with let me know if you're a first year, second year student, undergraduate, and just which discipline area you're in. So, for example, whether it's health or education or law or finance, just so I can get an idea of where you're at, whether you're just starting or whether you're third years. Second year, right? Oh, second year. Okay. Third, excellent. And we've got some finance people. First year architecture. Oh, gosh, it's and because I'm used to talking to finance people, and so this is interesting. And criminology, great. Okay, so we've got a bit of a mix. And so looking at this, particularly for the first years, I commend you for coming along to this, but everybody, because it can feel like it's never going to end, but it does end. This will be you one day. You'll be sitting here at your graduation, smiling and laughing about, yes, remember that assignment. And you might think, well, why are we doing this? Now, the Graduate Outcomes Survey, the most recent one that came out in May, or it came out in 2024, but looking at the 2023 outcomes, showed that for undergraduates, so this orange line, those within 4 to 6 months of completion, around about 80% have got a full-time employment, and that's increased by 10% over the last, about 8 years, 7 years, and likewise with postgraduate even more, and likewise with income. So the median annual salary 4 to 6 months after graduation, this is across all discipline areas and universities, but nevertheless, it's 71,000. Again, that's up quite a bit from even 2016. And you can see it's rising. And as we saw earlier, we're aiming for about 50% of people having this undergraduate qual. And I think sometimes when you're struggling to make ends meet week to week while you're at university and wondering, okay, is this going to be worth it? It can be hard to keep that in mind. So in terms of why people are doing this, why you're doing this, it can be useful sometimes to stop and reflect on that, because having that goal longer term can sometimes be a whole lot more motivating. And I've just put here, and if we had a full 2-hour lecture or something, we would go through some, potentially some reasons there. But I've just put what some of the other people have said in terms of why they're doing this. And it can range from absolutely wanting to have a higher salary, moving between jobs, being competitive in the jobs market, challenging themselves, future-proofing their careers, making history if they're first in family, the first gen to university, contributing to community, following family traditions. If everybody's, done medicine or law or something, then also contributing to the academic body of knowledge. And we really need more diversity and less bias in what is published. And then also personal interest. Some people just simply like learning, and there'll be a whole lot more. And so for you will have your reasons. And it's important to keep them front of mind, because sometimes when you're in the thick of it, especially you're in first and second year, it can feel like it's stretching out forever. And I think it's also important to take on the challenge of seeing this as in a really long-term perspective, especially when you're under financial strain. Now, I don't know if you can sort of see here, but I've got a car windscreen, and I use this because even I remember when my kids were younger, and they're sort of university age now, and even when they were sort of younger in school and they were struggling with things, I used to say, well, look, you've got the whole rest of your life to continue to keep learning, and also to benefit from what you're learning today. And so like I'm sort of around the middle now, let's face it. But if you're sort of still over here in the 18 to 25s, there's a lot of time left after graduation. And so sometimes the financial strain can take away so much, and it takes a lot to get through. But trying to not let it take away your degree as well, and all of the benefit that can come from that is huge. One of the biggest financial assets that people have that they often forget about is their cumulative lifetime income. And so, and it can be easy to lose sight of that when you're in the thick of things. Sometimes people take the scenic route. Sometimes you have to go part-time for a while and then come back, or not necessarily be making the best choices that you want in terms of having to moderate some of your spending. But having that longer term goal, I think, is important to just keep coming back to. So now we're going to get straight into the topics, because there were quite a few people who asked about financial aid and sort of the more emergent information. Now I've just realised that I don't think I pressed sound, so I'm just going to stop sharing and then reshare with sound. Bear with me, Ella and Courtney. Hopefully this is okay for you. Okay, I'm going to go share, include sound. Okay, and okay, this might not be operating, but sorry, I had a video here which went through the cost of living page on the course website, but it doesn't seem to be cooperating with me. So that's okay. Anyway, okay, so but what I do want to do is emphasize that this cost of living website that is on the Griffith webpage, and perhaps I can send these slides out separately so you can have a look at the video, because it takes you through all of the drop down. Oh, here we go. Video. No, that doesn't seem to be working.
Student Success is pleased to launch our new cost of living website. This series of pages has information and services that help you to take control of your finances. These supports can help you to save money, reduce your study expenses, prepare for placement, and uphold your rights. The main page includes a support filter, which is a quick and easy way to learn about your options and where to go for help as a domestic or international student. Once you've selected from all 4 categories, the filter will show you a short list of services that are most relevant to your situation. The red cards are Griffith services, and the black cards are services from the community. The other 4 pages are designed to educate you about the strategies, services, and tools that can help set you up for success. The Financial Foundations page will help you to learn about managing money, reducing study-related expenses, and what supports can help you increase your income. The next 2 pages look at the major costs of living. The Cheaper Living page focuses on food, transport, and the many health and wellbeing services available to you as a student. As well as links to find a place to live, the accommodation page includes the financial and legal supports that can help you maintain your tenancy. The final page outlines where to go if you need a bit of extra help or are feeling overwhelmed by debt and financial stress. This includes accessing support in emergencies, information on your rights, and where to go for legal and financial advice for debt and other matters. To find out more, go to griffith.edu.au/cost-of-living.
So, and hopefully you could hear that, but I think it just took a little while to load there. And I just wanted to emphasize that there is so much that is on that site. And so there's a drop-down menu, as the video showed, where you can look at whether it's emergency or housing. And I've just got some examples here in terms of scholarships, the hardship bursary, information on no interest loans, links to Centrelink and other student support. In terms of accommodation and housing, if you've got issues with your tenancy, there's a link to Q-Stars, and then links for accommodation on the Gold Coast, Brisbane, Logan, and then for LGBTIQ+, if you're having issues at home, there's the Open Doors Youth Service link there. In terms of food, there's free meals for emergencies, the emergency grocery vouchers, the campus cupboards, free fruit and veg, and then also recipes that use really good, like low-cost ingredients. And then there's a range of information about some of the free lunches, breakfasts, Tuesday cook-ups, pancakes, and the free dinner on campus, which is each fortnight, and also emergency relief, which I know, given that there's a cyclone literally outside or on its way, might be more relevant than perhaps I thought when we were putting this together. There's also links to local charities, neighbourhood centres, so you can find them in your area, and other food relief. And then for health, immediate support for mental wellbeing, counselling and wellbeing services. There's links to, a directory of bulk bill doctors on campus, free period care on campus, and then also links to affordable allied healthcare. So whether speech pathology, physio, that sort of thing, whether you need support on placement, textbook exchange, and then of course the study supports, computing and software, and the Griffith Tax Clinic. I thought I'd give that a plug. And as we said before, around the scams, legal support, debt support, there's a lot there. And I wanted to just showcase it very briefly before we go into a bit more detail on a few of them, because the careers and employment page is amazing. And it's very hard to sum it up, but I really encourage you to go in and have a look. There is just a world of information, and the services that are provided by that team. We're one of, I think, 2 universities that do the free careers consultation. They will look at your CVs. They'll help you with job interviews. They've got practice interviews with video interviewing and that sort of thing. And so there's a lot in there that you could pay thousands of dollars for, in other places. And so I really do commend it there, leading edge there. And then, of course, the clothing library and other support services there. So absolutely take a look at that. It's sort of, a gem that's potentially hidden in plain sight on the Griffith webpage. And so if you just think cost of living, COL, and it should sort of come along. Now, I wanted to go through a bit of detail on a couple of the things that were in there, particularly as some people did mention in their comments that it was around more immediate financial hardship payments. So the first one around the student financial hardship payment and bursary, this is a one-off financial support and, for unexpected financial hardship for education. So, or education-related expenses. Now, it's assessed on a case-by-case basis. There is an eligibility information on the webpage there, and I've put the link down the bottom, and an application form online. And there'll be, you can see what sort of supporting documentation is needed. And in addition, you can also access the laptop bursary. So there's kind of 2 payments potentially available there if you're eligible. And at one point, and I see on the webpage, it's got extreme hardship that's sort of put there, but I've just sort of put unexpected financial hardship because I think sometimes students can underplay the extreme financial hardship they're in because they might not be aware of how other people, don't necessarily have the sort of hardship that they've got. So, I don't want you to underestimate the financial hardship that you might be in. There is help available, so please do have a look and see if it's appropriate for you. Then in terms of Centrelink, that also came up as one of the most popular things that a couple of people asked about MyGov and MyTax. Now, I could spend a whole hour sort of going through this, but I'm going to just very briefly give you an overview. Hopefully, a lot of people have already got a Centrelink, a bit of a Centrelink understanding, but if not, Centrelink is a system through which social security payments, so these sort of safety net payments, are disseminated, and where links to a whole range of services come together online. And Centrelink also has in-person offices. And there's a range of payments available for eligible students. But the first thing you have to do is set up, or one way to approach this is to set up your MyGov account. And again, hopefully you've already done this, but if not, if you go to my.gov.au, it's an online portal for a whole range of government services. I've got, just put a screenshot there, the tax office, Medicare, and in a few slides, I've got a range of others that can be added there. There's a whole suite of instructional videos online. And I just want a word of caution, prepare to be patient and as zen as you can as you're going through it, because when you're first setting it up, and particularly when you're first linking services from, Centrelink or your health records and the ATO, the Australian Taxation Office, when you're first linking it into your MyGov account, it can be tricky. Sometimes you have to call them to get a linking code if they don't already have documentation from previous tax returns and that sort of thing. And sometimes it can be very hard to get through, especially if it's around busy times, like a busy tax time. So there is some proof of ID that's needed, of course, for security reasons. And so I just wanted to have a word of caution there. It's not like a 2-click process. It does take a little bit of time. And then there's also the My ID app, which is available, which is meant to, streamline some of that as well. So once the MyGov account is set up, you can then link to government services such as Centrelink, Tax Office. You can get a tax file number if you haven't already got that. If you're working, you probably already do have that. But if not, there's a link to get that. There's the National Disability Insurance Scheme information. You can also find out your HECS and help loan balance. That was one of the questions that came through on the poll as well. But there's just a couple of steps in terms of setting up your MyGov, linking it to some of these things, and then finding the links in that. If you're doing your tax online through MyGov, there's a MyTax, and it's a free way of doing it. There's a lot of the information gets pre-filled. Tax time, so the tax years start the 1st of July and end the 30th of June. And the pre-filling of information that comes from bank accounts and everything into the ATO's My Tax site on MyGov is usually filled by about the end of August. So depending on when you want to lodge your tax return, generally it's best to try and get it done before the end of October. But for a lot of young people, they're actually getting tax back. And so there's usually not too much of a problem if, you go a little bit over time. But and it's never too late to catch up on tax returns. There'll be previous years that are just listed there, and so get a nice cup of tea, set aside some time to sort of go through it once it's all set up. And we could always do another sort of session with the tax clinic on some of that as well. I've used My Tax on my tax returns for many years. Okay, and right, so that's sort of the MyGov. And then once you're there, Centrelink, and you can go to the Centrelink page anyway. And so I've just put a link there under the Services Australia site where you can look at payments for higher education. Again, hopefully you've already got this information in terms of youth allowance, but if not, it's there. Same with Austudy and AbStudy. There's a great payment finder that is like a wizard tool where you can go through and put in information about how much you're earning, and then it will tell you whether you also get rent assistance and whether you're living independently and all that sort of thing. You might get an energy supplement and those sorts of things. Then and some of the other payments too, if you've moved from a rural area, and because that is so much harder in terms of helping to make ends meet. And I just hope you feel very welcome. There is help available, but there's up to $5,000, a one-off payment. Some of these payments can also be backdated. And then, like I said, there's rent allowance, the youth disability supplement. And so there's a whole range of things on Centrelink. Again, it's one of those things that we could spend a while on. And there's a slide towards the end where we're actually having some people from Centrelink and some of the energy companies coming along to campuses to answer all your questions in detail in a really personalised case-by-case basis. With the energy suppliers, it's a bring your bill day and see how we can sort of reduce some of those expenses. So that is Centrelink, and I'm seeing there's no direct questions on that now, so I'll continue on with the second. This is just another one of those many links that are on the cost of living page, which is around the no interest loan scheme. And the reason I've picked this is because if you were considering, like if you meet the eligibility criteria for this, which is, I would say most of our students probably do, or a lot of students would, this is so much better than using credit cards or buy now, pay later to make ends meet in terms of bills and expenses. So this is run through, I think, Good Shepherd Finance. They have a lot of NILS, like the no interest loan scheme providers. And so you can borrow up to $2,000 for essential goods and services. So for things like appliances, white goods, furniture, car repairs and registration. Now, they don't give out anything in the form of cash. And so you can sort of put a bill in, but it will be paid directly from the NILS provider directly to the supplier. And there's no interest on the loan, and they will set up a payment plan, which might be, $12 a fortnight or a week or whatever it might be. And then also up to $3,000 for bond and rent. And so now in terms of how it works, you submit your invoice so not paid, but with your application, and they will pay it directly to the supplier or the vendor. This is available for domestic and international students, and the eligibility is if you earn less than 70,000 annual income as a single person and 100,000 as a household partner with children. Or if you have experienced family or domestic violence in the last 10 years. And so this is one of those emergency payments with no interest that you can get straight away for domestic family violence. Or if you have a healthcare card, pension card, and you can show that you can afford to repay the loan, and there's very reasonable terms in terms of that repayment, you will need to provide some information around ID. But it's just something to keep in mind, because I think a lot of people don't necessarily go to this first, and it's something that can, fill in the hole in the bucket if you're talking $2,000 or $3,000 for other bills, and if that can be used to pay for something with very reasonable loan terms, if you just cannot make those ends meet, then that's something that's there. Okay, so now I realise we're spinning along with the topics, but we have got a lot to get through. We've got 25 minutes to go. So I just wanted to talk about HECS, or the Help Loan Scheme. There were so many questions about this in the response that was back. So, and again, for first years who are coming in, you may or may not, it's not census date yet, but you've and people who in second and third year, hopefully you're sort of across HECS. But HECS or HELP is the loan from the Australian government to pay for part of the student contributions for Commonwealth supported places or course fees. So it just means that it's a system so that you don't have to pay course fees up front. And so you can nominate, and I've actually put a screenshot there from the one of the questions on the Griffith webpage where somebody asked about how do I change how much I want to pay, or how do I change whether I choose HECS or not. So it shows you before census date, each trimester, you go into My Griffith Finances and you can select whether you want to have your fees paid to HECS or pay up front. And so most students in these places, do forego payment of those fees and put it towards the HECS and HELP scheme. And there's a link to an electronic form, the Commonwealth Assistance form. It should be fairly easy following the instructions on the side there in terms of this question to get to it. But again, if you aren't finding that it's not working for you, please do call up and get some help with it, because it is a great system in a number of ways. And so I can talk about the benefits, and then potentially some of the pros and cons, but really it's one of those things where it's a system that works very well for a range of reasons. So the thing about the HECS or the HELP debt is that it doesn't get repaid until you're earning a certain amount of money, and the current minimum threshold to begin paying back is $54,453, and it gets paid off through the income-based tax system. So once you're earning around about the $55,000, there would be 1% of your income would be charged, I guess, at tax time to go towards paying off your HECS debt. So the more you earn, the higher your compulsory repayment will be, up to a maximum of 10%. So, and if you just sort of look down the bottom there, if you're earning around about 160,000, that's where you'd have to pay 10% of your income. Now, if you're earning around 160,000, then your degree has probably paid off for you, and it might not take that long to pay back your HECS debt anyway. But I've just sort of put an example there. Alex is starting their first year out as a solicitor, earning $69,300. I tried to pick around that average $71,000 graduate salary. And so that's a 2.5% repayment rate. So that's $1,732.50 that they'll pay off their HECS debt in that tax year. So now there's a couple of ways that you can pay this off. And I noticed a couple of people asked about installments. So whether they're just really planning ahead, or whether some people are already earning this sort of money, maybe studying part-time or something, I thought, okay, I'll answer it. And the first step about that is understanding, and hopefully I'm not going too fast. If you've got any questions on this, let me know, is understanding indexation. So indexation is, so in theory, the HECS or help loan is interest-free, but it is indexed to keep up with the cost of goods and services, inflation, or the wage price index. And that change to the wage price index actually came through towards the end of last year. So, and that was because there was quite a bit of pushback on the on inflation. The consumer price index that was used was actually quite high, as we've seen historically high over the last few years. That has been rolled back now too. So I've got some, I'll show you the indexation rates. So indexation is really just about keeping the money the same as what, you know, the value of money is out there and wages. It's applied on the 1st of June every year to the portion of your HECS debt that's older than 11 months. And so and the rate of indexation changes every year. So I've got the table here for the indexation rates beginning back in 2013. So as you can see, it's usually between used to be maximum 3%. And in 2021, when inflation was nothing, it was almost like, you know, it was zero, it was almost nothing. So it was 0.6%. And then it started to grow. And then in 2023, there was actually 7.1% applied. That has now been rolled back. Jump off, but thank you. Yep, no worries. And down to 3.2%. So that's the wage price index was 3.2%. So now it's whichever is the lowest of CPI and the wage price index. So both of these amounts have been rolled back to lower amounts, and that will get credited to people's accounts if they did have it. So they might find that their HECS debt actually goes down if you know, I mean, you might not have had a HECS debt at that time if you're still in your first and second years, but just to be aware that that's sort of rolling back. And inflation is now begins with a 3. So each year it gets closer and closer to that 2 to 3%. So historically, it's been much lower than interest rates on virtually any other form of debt aside from the no interest loans. And you don't have to start paying it back until you earn that amount. If you were to die with a HECS debt, it does not get passed on to your estate. And so for a lot of people, it's been one of those debts that would be considered one of the last to pay off, I guess. But that's not necessarily the case. People have a range of reasons where they might want to prioritise it, and it doesn't always have to be rationally around money. It can, you know, be for a range of reasons. But anyway, now some people might consider making voluntary payments, and there are a couple of questions on this. So I thought I would explain, yes, you can, and this is how you do it, but also some of the pros and cons, and we'll talk about opportunity costs there. So your annual compulsory repayment amount is worked out by the ATO with your tax return. And so you can check your HECS balance, though, through MyGov once you've got your tax, the ATO, the Australian Taxation Office, linked to your MyGov account. Your HECS or help loan balance is there. And if you're earning more than the threshold, say you didn't want to wait till tax time and then find out you've got to pay back $1,700 and think, oh gosh, I've got to, you know, find out how I can do this. You can instead, if you know that you're going to be earning over that 54,435, so what's that, you know, 1%, I mean, it'd be lower than 1,700, but you can ask your employer to take extra tax out. Now, I totally get that there are some people who will never want to feel comfortable asking their employer to do that, depending on the sort of job you're in. And so the other thing is to prepare and just save a bit extra for that bill yourself. So say you were indeed earning the 69,000 with the 1,700 as the example with Alex. So that's around about, off the top of my head, there's about $30 a fortnight that you would set aside ready for tax time to pay that. Now, but if you ask your employer to take it out, it just means that you don't get a bill as such. It's when your tax is worked out at that time, whether you refund or whatever you have to pay, we'll just take that into account. And so one of the questions was, you know, should I worry about the HECS or help loan? And now traditionally, like I said, the help loan HECS is regarded as the best loan you can ever get and often considered the last loan to pay off. Now, that did change a little bit during COVID, particularly when 7.1% was added. That has since been rolled back, but at the time that was certainly, you know, concerning. Now, as the loan gets closer to being paid, this is potentially, you know, I feel like I could represent Australia in HECS debt at one point. I don't have any now, but, you know, I've got 5 degrees and even from my first degree, HECS was there. And I just paid it off throughout my salary over time. You know, it was one of those things where I had other priorities to allocate my money to. But in that last year, when say you're down to like a few $1,000s in your last year, that could be one where you sort of think, well, maybe it's worth paying it off. So in the last, because the indexation amount gets applied on the 1st of June for any amount that's more than 11 months old, if in those 6 to 10 months before then, you can pay it off, it just means that there's no indexation that will hang over to the next year, so or be applied. And so that, to me, I think maybe that's why people really want to allocate money to paying that off sooner. There may be other reasons as well, but we'll talk a little bit more about those. And part of it could be because when you go for a home loan, for example, previously, and in some ways, banks do have to take into consideration how much of your income needs to be allocated towards your HECS debt. But I mean, they would still also look at, well, how much do you have as your deposit? If you're using your deposit to pay off your HECS debt, they would be able to sort of balance that up. And you may have seen an announcement recently saying that there's just a change to the regulator has APRA, the Australian Prudential Regulation Authority, has been asked to explore how HECS debt is considered in home loan affordability and perhaps looking at how that could be more leniently considered. So, we'll watch this space. And, everyone will have their own financial goals and, their own debt comfort levels. And so you will know why and how you want to make some of those decisions. It's not always economically rational, but when you're comparing paying off, your HECS loan, do think about the opportunity cost. So the opportunity cost is like, well, what are the other alternatives that I could be, what are the other goals I could be getting towards or heading towards with this money? And, sort of consider, well, which goal am I deferring to meet this HECS goal of, paying off my HECS debt right now? And so every decision involves trade-offs. And if you're getting a 4.9% return in a fixed term savings account and your HECS loan is only being indexed at 3%, you're already 1.9% ahead if you put that money instead into a fixed term savings account. Now, for some people, they might say, yeah, but I'd never do that. And so I'm better off just using it for something straight up. But, it's just at least worth doing the sums. Or if you've got a mortgage at 6.25% interest, or a credit card at 21%, or any other personal debt for things that, particularly if they're if they're for items that aren't appreciating in value, like if you've got a car loan that's depreciating in value, it could be potentially, from a rational economist sort of perspective, it can be hard to justify paying off your HECS before paying off some of those debts first. And so, and so I realise that, it's not to say don't ever prioritize paying that off ahead of other things, but really have a think about why you'd want to be making those extra repayments and think about the pros and cons. But if you did want to make voluntary payments, because it seemed like some people did want to, you can do that at any time through through MyGov, and there's tax accounts, loan accounts, and you can make payments directly off that balance using BPay credit or debit card. Or say you wanted to pay more by installments, there's two ways that you can do this. And depending on how you set it up with your employer will depend on whether it shows on your balance progressively or whether it shows on your balance at the end of tax time. So say you ask your employer to take out more tax to cover it because you don't want bill shock at the end of the year. And so you might say, actually, which is the next slide along. Say you don't want bill shock, you might just say, please take out, X amount extra tax, and instead of it going directly off your HECS or help loan, it will just mean that you're paying more tax. And so when your indexation comes through, and the amount of money that you need to pay off your HECS debt that year comes through at tax time, you've already got that extra tax paid up. So it's kind of like forced savings through the tax system. So that is one approach of smoothing out your cash flow planning around paying off your HECS and help debt. But if you wanted to pay it off directly, then you need to give a payment reference number to your employer. And this is directly linked to your help loan. and it will contribute directly to your HECS loan progressively. So it should show up on your balance within about 4 days, 4 business days from, that being paid. So on your payslip, it should say STSL, Study and Training Support Loan. So this will look different to if you're just having extra tax taken out so that you don't have to worry about a big bill at the end of tax time. This will be paid off your loan progressively. Now, what that will mean is that you will still get an amount that you have to pay at tax time on that lower amount. And so, but you will pay it off faster if you've got a compelling reason to do that. I know I keep saying that, but okay, and we've talked about avoiding bill shock. Now, in terms of future implications, if you go overseas and earn money beyond the income threshold, you still need to pay off your HECS debt. Any outstanding loan is cancelled if you die. And so remember, it's not passed on to your estate. Your other assets and your other debts potentially will be. It does not affect your Australian credit score. We could talk, have another session on credit scores and how and why to check that. And there is an opportunity cost, to paying off a HECS debt, because you're forfeiting other goals that you could be working towards. And that's that press release I talked about recently. Now, the student startup loans, one person asked about that, or they said the student SA loans. I'm hoping that this is what they mean. And so this is the voluntary loans that students can take out. It's 1321 up to 2 times a year. It is sort of added to your HECS and HELP loan, and then you also pay it back once you get to that threshold. Now, I've just sort of put down the bottom, there might be better options like the NILS loan scheme, that people might not have considered. But for the student who did ask that, I just wanted to, say, yes, this is similar, slightly different, and it gets added to that debt and is sort of paid back a very, very similar way. Now, the next most popular question was around bank accounts. And I do want to get on to budgeting. So I realise we've only got 10 minutes to go. Now, with the bank accounts, in terms of finding one that's really great for students, there are a range of comparison sites like Finder and CanStar. The thing to look for is low fees, higher interest, and what sort of access do you have? Some people want to have at least one branch somewhere, and other people, they just want a really great app for their banking. And so if you look for 0 monthly fees, 0 transaction fees, 0 fees, as lowest fees as you can possibly get. I know there's some out there. I can't talk about products in particular, so I just have to be general around this. And there are sites where you can do some of that comparison. And if you look for higher interest rates, or at least some interest rates, so a base rate is a standard rate that you'll have on your everyday savings account when you see a base rate there. And then there might be bonus interest rates for certain amounts over a longer period of time. And then fixed term accounts is when you lock money away for a while, even 6 months, and then you might get, 5.5% return per annum on that. So that would, of course, be over a year if you wanted that full 5.5%. And, check any extra rules if there's minimum balances, ask about any strings attached. Sometimes there's no fees as long as there's no withdrawals or minimum deposits and other conditions, or there might be online only. So it's worth checking some of that detail. And CanStar and Finder, when you go through their sites, actually give you that detail. And if you do find a better one, you think, right, that's it, I'm going to change bank accounts. And you've found a savings account that's got no or very low fees, higher interest rates than what you've currently got, the ability to have sub-accounts, which when we get to budgeting is really helpful in some ways, if that's what you want. Bonus interest rates, great customer service, online functionality, and you want to open that account, make sure you provide your tax file number to them, or else any interest might be taxed at the highest tax rate. And so, you might not be getting that much interest, might not be that much of a concern, but if you've got your tax file number, by all means, certainly provide it. They should ask for it anyway. Often there's an online sign-up process. Sometimes you have to head in with your identity. And there was a little bit of, that sort of increased a little bit at some points. But now with AI and technology, especially with the online accounts, the internationals, Wise and what have you, you can do it all online. And sometimes you have to deposit at least some money, such as, $1. But then also check that your old bank account doesn't have any fees if you leave it kind of empty. Because some people might want to close it. Some people might want to leave it open just to have the option of going back to it or having a second account for whatever reason. second bank. And some people, so if there's no fees, make sure you've transferred all of your direct debit amounts that would be coming out regularly to your other bank account before you close any of them. You don't want any sort of fines or services being cut off or insurance being cut off, that sort of thing. Cancel and destroy any old cards. And if you'll leave it open, just check in regularly in case there's any changes to those fees. Meredith, I'm just looking at your question. Not as far as I know. No. Meredith's just got a question around Centrelink products, HECS style loans to pay for postgraduate courses. Unfortunately, not that I am aware of. Other people here may know. And likewise, the international advisors might know, but you may have already asked. In terms of savings, and look, I realise that time is running out, but thank you, Meredith, for that. That's something I can find out about, but yeah, I'm not aware of any. Now, in terms of saving, again, we could spend a whole hour on this and really go into psychology around this as well, but we haven't got time. So just in the space of a couple of minutes, I wanted to at least, thank you, Luke. Depends on the need, Luke. Yeah. So have a look at that. There are some emergency fund. NILS is available as well, but that is limited. Yeah. Okay, so there's a Saver Plus program that I wanted to emphasize, which is a free financial education program that includes matched savings up to $500. Now, there is some eligibility criteria, but if you're saving, I think it's around about $12.50 a fortnight or a week or something, it will be matched by the Smith family. And so there's 5 sessions that are run on Teams that take you through some of the financial system basics and savings habits and that sort of thing. So I just wanted to give that a big plug in case you meet any of this criteria. So if you have a current healthcare card and an eligible Centrelink payment, and have a look at what some of those are. If you have regular income, and if you're studying yourself or have a child in school over 18 and agree to go to the financial education workshops, which, you all seem enthused about that already. And there's been a significant uptake in tertiary students completing the Saver Plus program and getting into that saving habit, and also having the $500 matched to their $500 of savings. So please go and have a look at that. In terms of common money pitfalls, I've just put a lot on this page. There is a lot, and there's also ways to recover from it. And so many of these aren't your fault necessarily. I mean, scams, everybody's probably going to be scammed if you haven't already been scammed. And it's one of those topics of interest for policy and regulators at the moment. And we'll see more and more sort of action go in that. Trying to destigmatize it and talk about it more, I think, is really important. Now, credit card debt, buy now, pay later debt is one very common pitfall, and there are other options. And when we look at budgeting too in a moment, payday lenders, some of the fees that they charge can be like 800%, like just terrible conditions to some of their loans. But I also understand why people may have been drawn to them for various reasons. And so substance abuse, problem gambling, violence, underinsurance, tenancy issues, cybercrime, identity theft, unexpected bills, car accidents, all of these things, impulsive shopping, relationship breakdowns, all of these things are very common pitfalls. And I wanted to, if whichever, wherever you're at, if you come across something you think, okay, this isn't going well, I just wanted to emphasize that there is free financial counselling available to anyone. Now, depending on the extent of the financial counselling, sometimes there are some income limits, but if it's in the case of domestic violence and various other things, there's also other streams for getting help depending on what your situation is. So 1-800-007-007, it's the bond of the helpline where you can talk to free financial counsellors. They are, and so you don't ever have to pay for it. So sometimes when you look up the National Debt Helpline, you'll start getting people who charge to do the same thing that free financial counsellors do. So they're a not-for-profit, community-based and non-judgmental, confidential. They can help you do a full assessment of your financial situation. They will help negotiate with banks, the ATO. They can clear payday lending debt if it's been done in a way that's very predatory, for example. They will give you advice on your options, your rights, your responsibilities. They can refer you to legal services. They can absolutely set up crisis food and accommodation services. They help with gambling addictions, other substance use addictions. They can help you develop a workable budget and money plan and advocate, negotiate on your behalf for things. So I just absolutely wanted to plug the financial counsellors and ICAN, the Indigenous Consumer Assistance Network, and then this is, just some screenshots from some of the financial counselling for that's, Indigenous run, led, designed, that might be suitable as well. Now, budgeting, I know our hour is up. If it's okay if I go another 10 minutes, Ella and Courtney, because just to clear some of these, just a quick word. I'll press on for 5 minutes and see how we go. So a quick word on timeframes for budgeting. So we can talk about short term, and for a lot of people looking at what you wanted information on today, it seems to be fairly, getting to the next page, 0 to 3 months or 3 to 12 months at the longest. Then there was some medium term budgeting cash flow questions from about 2 people, I think, about the 1 to 2 years, 2 to 5, and not really much on the long term budgeting or cash flow planning of the 5+ years. But we're going to look at some basic steps. If you're overwhelmed, start with your immediate needs, really short-term goals, if that's what's keeping you awake at night. And if you're feeling okay to think short, medium, and long-term, then go ahead. Believe it or not, it can be an enjoyable process, but I understand that it can take time to expand your horizon depending on where you're at. And if you're having a bit of trouble prioritizing some of your goals in terms of your budget and your money, one trick is to think, if I said to you, I can wave a magic wand and one expense will be off your list immediately, what would you want that, item to be? And then the next, and then the next, and you can start to reflect on what's, the most urgent and pressing for you. But of course, you can work towards multiple goals. And so some of those might be, if you really think about this sort of short-term, immediate term, not having to take on more hours of work while studying, meeting those essential costs, clearing your credit card and buy now, pay later debt. There might be some emergent healthcare you're looking at, or personal care, getting some contents insurance, short-term travel, like a weekend away. Maybe you need a new computer, going out, and there might be other ways that you can do this that we've perhaps gone through. And then trying to get to a bit of an emergency buffer as well is a big goal for some people I know, but can be very useful. And then it's about prioritizing it and sort of keeping to it. So the first thing you need to do is your sums and doing your sums to get that baseline. So this is about identifying and counting your incoming money. And I've just sort of put a note there. Sometimes that's a really short list. It might be 1 or 2 lines. And then identifying and counting what's currently outgoing. And that can be a really long list, 11 billion lines, and can seem a little bit disheartening when you're doing this. So, and then looking at, okay, how do they sort of match up? How does that align with my goals? So recording your income is the first, step. Make a list of how much you're getting, where from, and how often. Then adding up your expenses. And I've put some information that's coming up in terms of how to do a budget from the Money Smart website. And I'm going to go through 4 different approaches you can take depending on your tendencies with money. And so, yeah, this can be pretty confronting, and you might need to just take a bit of time to keep going back to it. Try and be as honest as you can. Go through your expenses and, just sort of reflect on just how many coffees you've bought in the last however long it is, or indeed how long it's been since you've been to the doctor that you really should or need to go back to, or whatever it might be. And terms of looking at some of that. Setting your goals and your current spending limit is really important, so you can prioritize over different timeframes. And if we did a session on goal planning, we'd really look at how to write those goals so they're really specific, realistic, time-bound, etc. And then, so I'm given the time, I'm going to flick through about and then, of course, your savings goals as well, setting up an emergency fund, that sort of thing. Reviewing and adjusting your budget, it can potentially get more exciting. I'm going to go through a few different types. So the first budgeting method is basically a spreadsheet planner, budget planner. Now, some people would rather do anything other than undertake a spreadsheet budget planning, and there's different approaches for different people. These are screenshots from the Money Smart website, and I've also got a one-page spreadsheet that I've got some slides on, but I can also just send through, which is a very simple budget planner as well. And so you can make this as simple or as complex as you like, and you can set up and forget once your accounts are automated and direct debits are set up. Do what works for you. So income, like I said, it's often not a very long section. So you might have youth allowance, rent assistance, energy supplement, your work income. So 1410. And this is an example only. I just want to emphasize an example only about, some of the things that you're adding up. So you might have rent, electricity, telephone, and internet. You might think, okay, fortnightly allocation. And that's because these amounts go in fortnightly. Your work income goes in fortnightly. So sometimes it's easier to think, okay, if I've got 1410 here, I don't want to be spending more than that on my fortnightly budget. And you see, I've color coded these. So you've got 3 sub accounts. So say if you've got this amount money coming in, or you've got your bank account where it might all go in and, similar days each fortnight, you can then automate sending these amounts into these different named accounts. And so you know that this spending one is the only one that you really, go into and sort of check on the regular, because the direct debits is for bills. It can take a bit of time to set up your bill so that it just comes out automatically, but that saves bill shock and it can help with cash flow smoothing over the year. You can do it for pretty much anything, registration, certainly insurance, phone, electricity, all of that. Rent can be direct debited. So there's a whole range of things there. And so you can see, some of the items and you think, well, how is that allocated per fortnight when some of these things, like the holiday season gifts, $20. So if we go to the next slide, there's another approach. So say you've got, these are your fortnightly allocation here. And depending on what it is, so say with electricity, that might be $300 a quarter, so 3 months. And this is when it comes out. And this is how much, because say this budget was done at the end of March, because we're almost there now, you would have, say, $300 allocated to that bill, for when it comes through and it gets direct debited. Same with telephone and internet, it might be a monthly $120, but you're allocating $60 a fortnight because that's how much you've got to set aside from your current budget. And so all of the green amounts, and this spreadsheet just automatically adds these amounts up for you and tells you whether or not your direct debit overall balance. So you've only got 3 items you have to keep an eye on. Once your spending is 0, it means you have to wait till your next pay. But currently, these 3 amounts are the only ones that you need to sort of keep an eye on. That's how much. Oh, sorry, this is the actual. So you want to pop it in there. Now you can see here where the red is for savings. So say you want to have 2 weekends away, you might allocate $40 a fortnight or $500 twice a year. And so there's 8 fortnights, and so that's $240 that cumulatively you should have had saved, by now. And there's other things that you potentially, haircuts, birthday gifts, that sort of thing that you'd be saving for. And there's other things in that other broader budget, but you can see it's a bit behind. Now, your direct debits, there's a nice little buffer there. And so, and the spending, you've got a $220 left in that spending a sub account on your phone, your bank. And that's exactly what is left for spending in the broader budget here as well. So it just means, once you've set up the list of items that you've got in your budget for each of these things and really how to think about, well, how often do I have to pay some of these bills? And I think I've got here for all these expenses. So say, for example, say you pay for parking at uni, and that's $280 a year for an annual permit. And so that's $12 a fortnight. and it gets charged every February. So we've just paid it. So we've only been a month out. So now there's only 2 fortnights where you've accumulated it ready for next year. So that's $24 that you're accruing. Now, so this savings difference here takes into account everything that's been added up that should have been accrued, that should be accumulating for that annual bill over here. So this fortnight is, okay, for this pay, this is how I'm going to allocate all my money. But the only account that you really see is your spending, your orange account. You know, what goes out for direct debits, you just prepay that and can set and forget once you've set up your regular direct debits and you know how much it is and when. So say with registration, so you might have a quarterly direct debit, $200, 4 times a year to make up your $800. And that comes out the end of March, June, September, and December. So you've got $200 that should be allocated there. And as you can see, the direct debit amount is looking fine over there. So this spreadsheet I've already got set up, and the main one you need to think about though is that immediate, the fortnight. How am I going to make my money cover everything I want it to cover with my goals? I realize we're over now, but there's other ways if you want to be a whole lot less full on about your budgeting. There's the percentages approach. So method 2 is the 50-30-20. So 50% needs, 30% wants, 20% savings. And again, you can automate that with 3 sub accounts. So as soon as your money comes in, you 20% into savings, 30%. And it's funny, I didn't actually work out the percentages that go into these different amounts, but that would be interesting to see what that was. And then the other one is the digital envelope method. Oh, and I should just say with the percentages though, once each sub account is spent, you have to wait until your next pay, you know, to spend more, for example, if you pre-commit to those sorts of savings. And so it is still important to understand it, but the 50-30-20 is a very common thing, but it might not work. Like, you know, that might not be enough. That's set aside for needs, for example, when you're on a lower income. The digital envelope method is where you have detailed sub-accounts. And I have seen some people do this. You know, for me, I'm happy with 3 or 4 sub-accounts. But I've seen some people just, you know, this is how much I got for coffee, this is how much I got for this and that, and you know, and they'll really look at how much is left at the end. And once they've used all their going out money, they don't go out till their next pay. So yeah, and so that's another way. And again, you can automate it. You can set up your sub accounts, and it takes, you know, a bit of time. And then there's the 3 bucket method, which is just bills, spending, savings. You know, and again, that is pretty similar to the percentages, except you actually work out how much is needed for each of them, and you know, just allocate those amounts. Okay, and some tips. You know, gradually set up prepayments. Even if you just set a goal to just get 1 direct debit or prepayment set up a fortnight, you know, within a few months, all of your bills will be automated and set up as direct debits. That can really help with cash flow smoothing, and, you know, especially for things like car insurance and car rego and insurances, electricity, you know, water if you're a homeowner, that sort of thing. And try and set up an emergency fund, even if it's $10 a fortnight, it will just take some of that pressure off. And then reflect on, is this even working? There's a lot of apps that can help with tracking of spending. Some people find them terrible. Some people love them. You need to work out what's going to work with you and your tendencies and your decision-making and thinking biases. And again, all of these are just proposed guidelines. So, you know, I've tried to get through, just as a recap, a bit of this, some context, where to find financial help, a little bit on the HECS help debt, a little bit on bank accounts and savings, some common money pitfalls, and a bit of a brief intro to budgeting. And like I said, I could send through that spreadsheet, but just a reminder, please go into the cost of living page. It is fantastic there, lots of information. And there are a range of other things that are coming up during Welfare Week on the different campuses and Services Australia. So Centrelink will be there. As will Q-Stars, Basic Rights, Relationships Australia, and it's a bring your bill if you want to bring your energy bill and say, how can I make this cheaper? What am I doing wrong? I think I'll bring mine anyway. And so that was all I was going to cover for today. And Ella and Courtney, I'm not sure if, look, I'll stop sharing for a moment so that I can come back to the screen and see if there's any other questions that we've got. on that. Okay, so look, I am really open to questions now. I know we've gone over, but there's quite a few people still here, so well done. And I commend you on this interest. And if there's, I feel like it's been a lot of information and I've barely gone through some of the first topics that you've asked for. Ideally, I would do more bite-sized videos on specific topics that could be more accessible and to look at different points in time, and even a separate one on budgeting styles and that sort of thing, if helpful. Okay, so I'd like to open up to questions. If anybody has any, please don't be shy. Or comments. Out of interest, would anybody like me to attach that spreadsheet with the simpler one? Okay, I've got a few yeses. All right, I'll see if I can just attach that now. Okay, see if this works. It says chat is only available during the meeting. Maybe, hopefully the meeting hasn't ended. And Courtney, I'm just trying to click into the chat to attach that. Maybe I need to email it to you.
If you want to send it to me, I can put it in the chat.
Yeah, sure. Okay, I'll do that to the side. Bear with me while I set that up. Okay, I'll just attach it as is. Okay, and I've just sent that off. Hopefully you can see that there, Ella. Yeah, because it just saves you having to set up all the, the formulas in Excel there for that sort of basic budgeting. Okay, Meredith, I arrived in late, but is the cost of living? Yes, it is, Meredith. And I could even, so if you go, I've got links on the slides, but also if you just go on the Griffith website, if you go cost of living, it will bring it up. And then there's links to all of those services. There's a drop-down menu. There's so much there. And I'm every time I can, I'm sort of promoting it because it's, I think, potentially underutilized. I mean, it's pretty new still too, but I just think this is fantastic because sometimes it's just even knowing what's out there, not suffering in silence. And I know that, a lot of students don't necessarily feel comfortable asking for help. And so I'm just trying to normalize this. And that's why some of the stats up front, are the 3 pages linked. So the totals transfer for, yes, Alice, I've actually just got it on one spreadsheet. And yes, all those columns are linked. Because sometimes people just want to see it on one page, and yeah. So the formulas are in that spreadsheet that I've just sent to Ella, and if maybe she can pop it in the chat. Again, you would absolutely be able to improve it. Funnily enough, it's the sort of thing I have worked through with my own 18 and 19-year-old. Thanks, Ella. So Ella's just got that. I'll see if it downloads. Hopefully I sent you the right one. Yeah, and they are also just examples. You will have your own income, obviously, and expenses and goals and priorities. So, and as you get older, or not as you get older, as you finish study and you're earning more money and you're working full time, when you think if you're working for 30 to 50 years, and earning it, well, if you're starting off on 70,000, earning, say, an average of 100,000, that's in today's nominal dollars, that's $5 million over a lifetime. So everyone's financial goals are usually contingent on that lifetime cumulative income. So it gets kind of exciting to decide on your goals over the long term, especially when you can see that it's not just about the next fortnight. This will end. You do sort of future-proof yourself. It's a big deal that you're doing the degree, but completing the degree is I'm hoping that it feels a little bit more worth it, and like there's some help through that if financial strain is one of those concerns for now. if we wanted more information on some of those broader goals, happy to have feedback on that and, you know, target it. For this session, I just wanted to go fairly broad on the context and some of those bigger things to think about. And then I just focused on the big topics. I would have loved to have gotten to car insurance, especially around CTP and home and contents insurance. I think a lot of students don't know that compulsory third party cover does not cover property damage on the other vehicles. So if they run into a Mercedes and they haven't got plus property on their car insurance, you know, they could end up with a very big debt. And, you know, so perhaps another session or maybe some videos on specific topics might work, but please let us know if you think that is the case or if you'd rather just have, you know, longer sessions. Okay, well, look, I can't see any other questions, I don't think. So I would just like to say thank you so much for coming along. I am always happy to have more of this. I do a lot of media stuff on the ABC, but I don't think that, you know, the people here are specifically the target audience for that. But I would be more than happy to go through any of these topics. But like I said, it could take, you know, well, far more than an hour. So depending on how you would like to get that information, really happy to do that, as including on campus. So, but I think this is good to make it accessible and good timing. And more specifically, please try and stay safe and batten down the hatches. I hope you've got some water. I think we've got a couple of torches somewhere here, but it was pretty hard to find anything yesterday. So, yeah, my pleasure. Thanks, Alice. Thanks, Sharon. Oh, yeah, Meredith, those sessions. Yeah, well, you know, if we press on with that, if there's demand for that, that would be really, really good. Thank you. All right. Thank you, everyone. Stay safe and happy studying. Oh, thanks, Daniel.